I'm Sarah Jane and I talk about my financial journey and share the lessons and experiences that I encounter along the way. In this video I'm going to talk about the Help to Buy loan and specifically discuss some of the things to think about when deciding whether to pay that loan back. This video is going to focus on the scheme that was available in England between 2013 and the end of 2020, and it was a really popular means of allowing people to get onto the property ladder and was specifically aimed at new build properties, where the government would loan you up to 20% of the value with a cap of £120,000 or £240,000 in London. You would then make a 5% contribution to the deposit, and it would allow you to access better interest rates, get your foot onto the property ladder, and was also interest free for the first 5 years. The loan itself could be up to the value of 20% of the property or 40% in London, and the government then would effectively own a stake of that percentage in your house. So let's say 20%, the government would own 20% of that. So although there is no interest to pay in the first 5 years, if your house were to increase in value, then essentially the value of that loan would increase as well, because when it was time to pay it back, you would pay what the house was valued at, say it was 20%. However, you would still retain the value of the rest of the 80% of the house that had increased. So there was a bit of a balancing exercise to make there. But really the purposes of the video is to discuss some of the things to think about if you've already got that loan in place and perhaps it's coming to the end of the 5 years, or you're looking to remortgage and thinking about whether you should be paying off the Help to Buy loan. Purposes, I think the first 5 years makes sense to just keep that loan going if you've opted to take the Help to Buy loan in the first place. There are some considerations about whether that was the right thing to do, but on the basis that you've got the loan, then should you pay it back or should you wait? This can be tricky to answer because a lot of it will depend upon your mortgage rate, how long that's fixed in for, and obviously I don't have a crystal ball. I can't predict what rates will be in 5-10 years time, so it's definitely a bit of a guessing game. If you look at some of the calculations, and again some of this is based on guesswork, it works out that even taking account of the interest, that the Help to Buy loan could be cheaper than a high loan to value ratio mortgage, particularly for the first 10 years. As I said, it's interest free in the first 5 years, so I think probably when you're looking to make this decision would be at the start of year 6. The initial interest rate is 1.75%, and that increases year on year by the retail price index plus 1%. It can be a little tricky to work out, so it's best probably looking at a table. And obviously this is also estimating what the retail price index is going to be. At the moment it's 2%, but all of the paperwork and sort of the government's estimations base it on 5%. So, and this shows the different years and looking at the estimated RPI and some of the other interest fees that would be payable. So you can see these figures are based on the interest you would pay on a home bought with an equity loan of £40,000 and a £200,000 value. So in year 6 you'd be looking at £712, and then year 7 £756, up to £896 for year 10. And then that third column just shows you the increase of the percentage figures. So those would be the interest figures that you'd be comparing to. Now obviously we can't predict what interest rates will be like in the next 10 years and what mortgage rate you might be picking up, but it looks in the first 10 years, based on the figures at the moment, they're not too bad. However, you've got to remind yourself that the government would still own 20% of the home's value, including any increase in that value over that period of 10 years. So although again it's difficult to predict house prices, pound for pound value of the loan is going to go up. So there probably is some benefit paying it off earlier, so that you retain the full 100% increase of your home's value. So this means if you bought a property that was worth £200,000, then it's gone up to £220,000, you would be paying back the £44,000 instead of the £40,000 you originally borrowed. So that's just something to factor in. So if you've got savings, you could use some of that or all of that to pay off the equity loan, and again that would probably depend on the different mortgage rates or whether you're looking to put your savings into investments and getting a higher return. So it'd be some of the number crunching for that. But probably I would imagine the most common scenario is thinking about whether it's worth remortgaging. So paying off the Help to Buy loan and then putting it onto your already existing mortgage, or when you're remortgaging to go on a new deal and putting that on there. Again, that will depend on some of the rates, and it's difficult to do exact calculations. But one of the things to think about, in the time that you have owned your property, house prices have increased significantly. It may be that paying off the Help to Buy loan would actually still have a similar level of loan to value ratio. And remember, because everyone nowadays is on a repayment mortgage, so if you're coming at the end of the 5 years, you will have paid off a certain amount of your existing mortgage, so that will have lowered the loan to value ratio as well. So you can combine that with the increase in house prices, and it may not mean that the jump to putting on the additional Help to Buy loan is as significant as you may have first thought. So looking at this example, again based on a property value of £200,000, I think this is on the Which website. They've done some calculations that even if the value of your home has remained the same over 5 years, you could theoretically remortgage and pay off the equity loan, while only increasing your loan to value ratio from 75 to 84%. And that's based on a 25-year mortgage at a rate of 3%. So when you take into account that you're probably remortgaging to try and get a better value, then that might close even more. So, I mean, when you're doing the calculations, you're going to need to think about what the mortgage repayments are going to be, that they're manageable. And also the number of lenders available may reduce with Help to Buy loans, so that's something to speak to a mortgage broker about. But in an ideal world, your repayments on your mortgage and the increase in value of your house should hopefully mean that you're in a position at the end of year 5 to remortgage and consolidate both of the loans into one, and not disrupt the loan to value ratio too much, and hopefully that means that the loan repayments are still manageable. I think as well it's important to remember that once you've paid off the Help to Buy loan, that then you own that 100% increase in any value. It means that you won't have to pay that 20% increase in your home's value back to the government. If you're not in a position to remortgage, you don't actually have to pay the Help to Buy loan off until you either sell the property or your mortgage expires, and I think there's a maximum of 25 years on that. So that's just something else to think about. In terms of paying off the loan, there is a set process which also attracts additional fees. You have to pay for a RIC surveyor to go and value the property to make sure that it's a fair assessment of what the value is now, to be able to calculate 20%. I think as well, you can't sort of just do it ad hoc percentages. You have to pay off at least 10%. So I think you can do it in 2 stages. There will also be solicitors' fees associated with discharging the Help to Buy loan, and I think there's an administrative fee as well. It relates to the loan redemption form, and that's about £200. So there could be, by the time you've topped it up, probably just under £1,000 worth of fees in order to pay off the loan as well. So that's something else to factor in when looking at the finances and whether it's viable to pay off at that stage. I appreciate that was a bit of a whistle-stop tour, and it's incredibly difficult to come to a definite decision because so many things are unknown. What will your house be valued? What will the mortgage rates be? What will the interest be and the retail price index be to allow you to calculate those payments? So you can't just put it all into a spreadsheet and compare like for like, because we just don't know what's going to happen in 5-10 years. In terms of my decision, I've got a Help to Buy loan on this property, and I think that the best thing will be to keep that for 5 years whilst it's interest free, and then think about consolidating it onto the mortgage when we remortgage at the end of year 5. And for that reason, I think it's also important to think about the length of any fixed deals that you enter in that period, particularly whether you think you're going to need to move products and whether they're willing to accept Help to Buy. So that's another confusing thing to think about when remortgaging. There are some really useful articles that I reviewed when preparing for this video, including from Money Saving Expert and Which. I will link those in the description below, and it's probably worth just going through those and having a look and comparing that with your own finances. I would be really interesting to hear if you've got a Help to Buy loan, whether you've already paid it off, was it difficult, or whether you're looking to do that now, because it's good to hear different people's perspectives. I hope you found that video interesting. I'm sorry it couldn't be more direct, and I'm really grateful for you watching. Thank you.